Hello, my name is Rafael, and today I'll be introducing you to Society One, a pioneering fintech that has reshaped how Australians borrow money. We'll explore what the company offers, who it's designed for, what risks users face, and how regulation comes into play. This isn't just about innovation, it's about trust, compliance, and opportunity in the digital lending landscape. So, a brief introduction to Society One. It was founded in 2012 and was one of the first platforms in Australia to introduce peer-to-peer lending. At a time when traditional banks dominated personal finance, Society One offers an alternative, a way for Australians to borrow directly from investors through a seamless online system. Over time, it's expanded its digital capabilities, adding partnerships like Westpac banking as a service infrastructure, and eventually merging with MoneyMe in 2022. This merger brought stronger financial backing and a broader product ecosystem, helping Society One grow without compromising its focus on responsible lending. So, who is our target customers? Who are our current customers? Society One primarily serves credit-worthy adults in Australia, people earning ideally over $30,000 a year, typically aged 21 and above. And these aren't high-risk borrowers. They're everyday Australians using loans for real purposes, paying off existing debt, making home improvements, or funding milestones like weddings or education. What makes Society One different is that it personalizes interest rates. If you have a stronger credit history, you'll get better terms. A refreshing change from one size fits all lending. And with no hidden fees or early repayment penalties, customers have greater control and transparency. Now, as with any financial service, there are risks. First, credit risk. If a borrower can't repay their credit score can be seriously impacted. For investors, the risk is liquidity. Funds are often tied up for 12 months or more, with limited early withdrawal options. There's also data risk. Society One uses AI to assess borrower credit worthiness, which means large amounts of sensitive data are being processed constantly, if not handled properly. That could lead to breaches or misuse. Even with a strong system in place, customers must trust that their data is secure, and that's a big ask in today's digital world. So, are they regulated? Are we regulated? To manage these risks, Society One operates under multiple layers of regulation. It holds an Australian credit license, meaning it's governed by ASIC under the National Consumer Credit Protection Act. This ensures borrowers are treated fairly, from affordability assessments to clear disclosures of loan terms. Because Society One connects borrowers with investors, it also qualifies as a managed investment scheme. That means investor money must be kept separate, risks must be disclosed, and reporting strictly monitored. It's also regulated by AUSTRAC, which oversees anti-money laundering laws, requiring identity checks, suspicious transaction monitoring, and more. All of this helps reinforce trust for users on both ends of the platform. That said, no regulation is perfect. One emerging gap is around the use of AI in credit scoring. While Society One uses machine learning to assess borrowers, current laws don't fully address issues like algorithmic bias, explainability, or consumer redress if decisions are automated. Another challenge lies in investors' liquidity. Even though risks are disclosed, there's no consistent standard across the industry about how quickly peer-to-peer lenders must allow access to invested funds. So while Society One performs well under current rules, regulators will need to evolve policies to address the changing nature of digital credit markets. It's not just about reacting, it's about staying ahead. So why does it all this matter to you as an investor? Because Society One isn't just a compliant, it's scaling. Their loan origination has grown steadily over the past few years, demonstrating that their model works. But what makes this growth impressive is that it hasn't come at the cost of risk. Society One has maintained responsible lending practices, strong customer satisfaction, and robust technology throughout. That balance between growth and governance is what makes it stand out in an increasingly saturated fintech market. So to wrap it up, Society One delivers smarter, fairer loans through personalization and digital-first convenience. Two, its risks, while real, are actively managed through strong compliance and technology. And three, it's positioned to scale further. Thanks to the MoneyMe merger and a loyal customer base, for investors looking to back a fintech that blends innovation with credibility, Society One is a strong future-ready contender. Thanks for your time.